GM Crypto Fam, and welcome to another episode of Q&A. And as you can see, it's just me here today. That's right, the weather forecast was predicting a torrential downpour in Dubai, and the rest of the team thought it'd be a good idea to avoid the flooded roads. But, come rain or shine, hell or high water, we will always be answering your questions every Friday. And given that I live in the office, no biggie. So anyways, we got some really good questions submitted by you guys. So thanks a lot for that, including, when is Bitcoin going to fall before the halving? When is the altcoin season going to start? What really worries me about the crypto markets? And as well, some hot altcoin picks, including some you guys may not have heard about yet. So we've got all that coming your way in this episode. So of course, hit up those likes and get ready, because we're ready to dive right in now with the first question. And that is from Petar Trajewski. And he's asking, is BTC poised for a small pullback before the halving? Yeah, that's what everyone's wondering. This whole concept of we've reached the all-time high before the halving. This doesn't make sense. This doesn't fit with the previous models we've all come to rely on. Is it what's going to happen? Are we going to fall? This doesn't seem right. In fact, I even pushed a poll on the CBC Coin Bureau Club subscription service. I pushed a poll asking people, does this recent rally worry you? And the majority said yes. And look, at the end of the day, everyone likes to rely on the models of the past. And the Bitcoin, 4-year cycle concept of reaching the peaks after the halvings has been entrenched, and people like to rely on models, and that's fair. People like to have a picture of the world and a picture of the financial markets that they can rely on in future market cycles. And the moment that gets invalidated, people start to wonder if things, something's wrong, something must be off. This is too good to be true. Bitcoin's hit that all-time high too quickly. What is going on? And look, that's just what's happened now. And the question then comes down to, has the model been invalidated, and has it changed, and are things completely different now? So, if we were to look at models, just looking at previous cycles, looking at what's gone on in previous cycles, you usually, for one, we're about 40 days away from the halving, right? And usually you'll have a rally into the halving. So in previous cycles, the rally into a halving from this particular date to the halving was probably about 20% to 30%, which therefore means, okay, are we going to see a rally? However, previous models and previous cycles usually had a fall and a big correction after it first broke through its all-time highs. So in the 2017 cycle, there was 50 days of aggressive drawdown in Bitcoin after the first hit its all-time high. In 2020, you saw 26 days of aggressive drawdown after the first all-time high is hit. So there's two different views of the model. One is we should be rallying into the halving, and the other is we should have a big correction of some sort right now because we've breached through the all-time highs. And look, in terms of correction, this is how big of a correction is correction to you? I guess the question is we've already had a fallback after we reached through the all-time high. Old wallets moved a lot of coins onto the exchanges and sold off at the all-time high. Obviously, a lot of pressure built up in the futures market. We're talking open interest near 3-year highs. And that obviously, when you have that much pressure in the futures market, you need a pressure valve, and that was the selling on the spot market, which led to cascade and liquidations down to 63, 64K. That's not the big correction everyone thinks about when they think about these cycles. So the question is a bigger correction coming? Or are we going to go into the halving, keep on rallying? And the way I like to think about it now is okay, let's assume what has changed in this market. And I've talked about this many times before. What has fundamentally changed? And that is, of course, the concept that we've now got these buyers in the format of ETFs that may not necessarily care about what the cycle says. ETF buyers right now, be it on the retail and on the institutional, which is a large majority of it, and retail side, are now have an opportunity to finally allocate to Bitcoin in a way they never had to before. They couldn't really have bought previously because they weren't allowed to in terms of regulations, and it wasn't tax efficient for them to buy Bitcoin in the spot market normally, as most people would, through a Coinbase account or whatever. So now this has been their opportunity to do it. So given that, I would think that they're less fickle and less driven specifically by price action in the short term, but more by the fact that they now have this opportunity to allocate towards Bitcoin. And when you have that kind of buyer, I don't think they're necessarily in it for the short term either, in the sense that, we're now going to go and we've bought Bitcoin when the ETFs launched at 50K or whatnot, or 45K or whatever. oh, it's now at 60K, let's start taking profit. I don't think so. These are, not necessarily trading funds. These retail investors who buy in are not buying in to the quick trade. They're doing it for the longer term value of holding Bitcoin as an asset and a diversified asset. So from that perspective, I think it's likely, more than likely, that we're going to continue increasing in price towards the halving. Yes, there is the possibility that we could have another retracement given the extensive amount of futures interest being built up. And obviously that always leads to pressure points when you have these levels and big moves in the spot market. So yes, we could see retracements here or there, but not the big retracements and aggressive drawdowns we've seen in the past. So that's my perspective on the question, but it's obviously on everyone's mind. And I get it. Like once your models are invalidated and you can't look at a roadmap of how things should be, it does throw people off. And we in crypto tend to get a little bit jaded as well, right? Like we're like, this is too good to be true. Something is off. What's going on here? Are the whales going to dump on us? Is Wyckoff method being at play? Are these crypto whales duping us, And that's natural. But I think that let's enjoy it while it is. And hopefully things have changed. Now, on to the next question. And this is from Think CD. And he's asking, potential ERC-404's future use case being for RWAs, such as mortgages or other loans? Yeah, that's an ERC-404s. I think let's first get to the question of ERC-404s for those who don't know what it is. And I will first preface that we do have a long-form video on the main channel about ERC-404s and all the projects on it and exactly what it is and its potential. But let me give you the quick overview. So it is an experimental token standard which combines a ERC-721, so an NFT token standard, with the ERC-20 token standard. And the NFT token standard, ERC-721, non-fungible token, and the ERC-20s are fungible tokens. Obviously, a non-fungible token is a unique representation of a token that cannot be replicated. And an ERC-20 token, they are inseparable, indecipherable. They're all the same, right? So it introduces the concept of semi-fungibility, right? So essentially the idea that you can literally fractionalize an NFT, right? And it's also, it basically provides for versatility, increased liquidity, and programmable scarcity. So coming back to your question around RWAs, well, for one, there's many use cases for being able to fractionalize an NFT. In the digital collectibles market, think about some of those very expensive NFTs that were sold, right? Think back to previous cycle, Beeple, 69 million every days, right? Like, he had one buyer. There is only one buyer who was willing to spend that amount of money. But many of the NFTs after the previous cycle, they couldn't find the liquidity because you have to find the one buyer to buy the full NFT. So fractionalize it increases the liquidity. So basically what you have is it's also not just in arts and collectibles, you also have it in the case of real estate, right? Now this comes back to your point of RWAs and mortgages and stuff like that. Real estate, for instance, can now be fractionalized. If you believe that the RWA narrative is a strong one, you can fractionalize a house, you can fractionalize an office building, and convert the NFT token standard into one that has liquidity through and can easily trade because they're fractions of it. And then, of course, mortgages, you mentioned, and loans, well, of course, in credit bonds, right? So instead of owning one full bond, you can own portions of a bond. Similarly, if you're looking at crowdfunding, right? Investing in early stage projects in terms of the traditional sense, people wouldn't be able to invest through tokens. They'd have to invest large amounts of seed funding through equity offerings. Well, now if you can fractionalize that and as from one token, an NFT token standard to an ERC, and you can fractionalize, you can have more liquidity to be able to sell these tokens. So that's it. It's also for novel DeFi apps, and like it operates basically a mint and burn mechanism. Right, so basically, what happens is if you have an NFT represented by in the ERC-404 token standard, a full NFT, and you decide to sell shares, the NFT itself is burned, and then people can trade the individual shares themselves. And if someone's collected enough of the individual shares to make an entire NFT, then it remints. So basically, that's mechanism it uses in order to make sure that there is only one asset of some description. Obviously, the ERC-4, if you know the background to ERC-404, you know the reason it's, fun fact, ERC-404, like the error code. When you're looking on the internet, you can't find a page. So that's kind of a quirk they put into it. It is a controversial background. There was these two anonymous developers who created it back in the day and originated from a potential. They decided to develop it because the one project they were working on had a rug pull. So the history itself is kind of weird. And of course, the Ethereum developers weren't too happy about it because obviously it didn't go through the normal methods of developing and proposing an Ethereum request for comment, which then goes through EIP, which is an Ethereum improvement proposal. So it didn't go through the standard method of implementing an ERC, so the community wasn't too pleased with it. But it is interesting. There are projects that have developed out on the ERC 404 concept, one of which I think is Pandora on the Ethereum blockchain. And more recently, actually, if you guys follow the Cosmos and Injective ecosystem, Dojo Swap, which is a project building on Injective, actually implemented CW 404, which is basically utilizing the similar concept within the CosmWasm and allows for fractionalization of NFTs and trading them on the Dojo Swap platform. So that's an interesting project in the Cosmos space. Is also implemented as something similar to it. But yeah, it's an interesting concept. I think it makes sense in terms of like being able to fractionalize NFTs. The only question is like, yeah, I mean, do you believe, if you come back to the point about RWAs, do you think RWAs is a strong narrative for this year? I'm not as bullish as many others. But that's one thing. And then also it's the question of, at least on the Ethereum ecosystem, the ERC4 token standard itself, it isn't viewed too favorably, at least for the core devs or ETH maxis. But yeah, that's a good question. ERC404s.
I was trapped inside a cage made out of the daily grind.
I was so unfulfilled. I felt like a blank sheet of A4 paper.
Something was missing from my life, but I didn't know what.
But then I found what I'd been missing.
The Coin Bureau deals page was the answer to my prayers.
It had everything I needed to make me complete.
Exchange sign-up bonuses of up to $50,000.
The biggest discounts on the best hardware wallets.
Trading fee discounts of up to 60% on the best crypto exchanges.
Exclusive altcoin alpha.
Thank you, Coin Bureau, for bringing me back to life.
On to the next question. And this is from Roosers7. And he's asking, student, small capital, ready for risk, not sure how to diverse my portfolio or not to do it. And he's saying he's got less than $3,000. And obviously, this is a very difficult question to answer because everyone's, in terms of what people's investment goals are, it's very bespoke and determined according to an individual's preferences and personal circumstances. So obviously I'm going to preface here, obviously not financial advice, of course, because it depends on your own personal circumstances. But I would say, from what I would read of the situation, you're a student, so basically it means you generally could take more risk than someone who's a lot older, who's relying on this money for a nest egg or investing in savings to live off. But of course, you could be a student that is looking to invest your next month's rent or your next semester's fees. So if it is those two options, then you shouldn't be investing at all in crypto. So that's the first point. But coming back to the point more about diversification, etc., I guess the question of diversification in crypto comes down to questions around your investment objectives in terms of timeline, in terms of potential returns, how much you're willing to lose. And of course, this all implies, how much risk are you willing to take and how much risk can you tolerate? Let's assume this 3K is money that you have spare, you don't really need it. If you lose it, it's not the end of the world. You're looking to make as much gains from this bull market as possible. You want to maximize those gains, then you can take more risk and you can think about it in terms of looking at more lower cap altcoins and making it more of the majority of your portfolio. So if you're willing to take on the risk, I would say, okay, 30 to 50% of your portfolio in small cap altcoins and only between 3 or 5 different altcoins. Because if you try diversifying across too many different crypto assets, right, you potentially atomizing your gains. I think the best chance of making gains, strong gains in this cycle, is to take well-studied and focused, concentrated bets instead of atomizing out your attention span to numerous different kinds of altcoins and then hoping that one of them just moonshots. Yes, the spray and pray approach does sometimes work if you have one of the coins at 100x's and all the others go to zero. But the problem then is, you're still atomizing your attention span, and you basically just throwing darts at a board. So you want to basically focus on very strong, concerted plays that you've done a lot of DD on, and they could be small cap altcoin variant. And then, of course, the next 50 to 70% can be in like larger cap altcoins. It's good. Obviously, you got to have some Bitcoin in there. But because he's a student, because assuming this money isn't needed essentially right now, and he's willing to take the risk on it, then there is no issue with taking smaller cap plays, being the majority of your portfolio even. But make sure that you've done your DD on these. Don't deploy the spray and pray approach. Don't just YOLO into every single altcoin that's mentioned on a YouTube stream or whatnot. Do your due diligence. Conviction is an important point in terms of being able to make gains on any sort of altcoins. So yeah, I think that's my view for you as a student with those 3K gains. But yeah, as I say, be careful if you need those funds for anything else. Cool. So now on to the next question. And this is from Masi Hassam. And he's asking, is Aptos a good L1 and have potential? Yeah, actually, this is a good one because I've been wondering what's up with Aptos, right? Because I obviously hold Sui, and if you know the background between the two projects, they both came out of the Facebook's DM project, right, or Libra DM. And one would think that many people think they're similar to a certain degree because they use the same move-based program language, which therefore means that they should be similar, right? So what's the difference? Why is Sui's TVL been crushing it, and why has Sui been a lot more excitement and interest in Sui in terms of just like if you look at the sentiment than Aptos at the moment? Is Aptos a sleeping giant there? And now I will also say that we just recently had an AMA in the Coin Bureau Discord server with one of the co-founders of Sui. And that was a really interesting discussion. And I will encourage you, it's been recorded and it's been saved. So if you are a member or if you're not a member, you can find the link below. But that was a really interesting discussion by the Sui co-founder. And I learned a lot more about the Sui ecosystem or what's happening there and how exciting it is. So I'll preface that that's what happened yesterday. But we've also done reviews on both Sui and Aptos on the main channel, although they're slightly older. So to the question, I think that when I was looking a bit more into it over the past few days around what really differentiates Aptos and Sui, there is quite a lot, and they're not really too similar in many respects. I mean, for one, the perspective of the whole concept of the move programming language, Sui uses an object-oriented approach, whereas Aptos uses address-centric. And the implications of that are that obviously it's a lot easier to build on Sui and use Sui's version of Move. And I've actually spoken to a few devs who've actually said so. So that's the reason why it's more Sui has been able to attract so many developers to their ecosystem. In terms of the underlying architecture, so Aptos still uses a blockchain, although it uses they're both parallel processing, and Aptos uses an optimistic approach in terms of I think it's block TES or something like that, whereas Sui uses a DAG, right, which is a completely different kind of architecture. But that therefore means that Sui's TPS, theoretical TPS, is much higher than Aptos's. So Aptos' theoretical TPS is 160,000, whereas Sui is 270,000. Obviously, theoretical is not what's been actually implemented yet, but it's a good benchmark. And there's a lot of smart people behind both projects, but I mean, given what I heard yesterday in terms of the Sui AMA, there's a lot going on there and some really super smart people in terms, also the people who actually, the guy who actually developed the Move programming language is working at Sui. So tokenomics side, I think both are, not amazing. Okay, look, Sui's got a lot, like Aptos had really botched the initial launch of the APT token. But it's now close to fully vested out, obviously, and it's got a small inflation rate, whereas Sui, it has got a cap supply of 10 billion, but it has still got a lot to vest out, including a pretty big unlocks in May, which you need to keep your eyes on. But I think that both Sui and Aptos are great projects, although I'd be slightly more inclined to favor Sui, and that's why I hold Sui in my personal portfolio. So yeah, that's the answer to your question. Aptos, it still has potential, but I would say less so than Sui. Next question, and this is from Chavoli, and he's asking, when will altcoin season start? Yeah, that's the next question, right? Now that Bitcoin's broken those all-time highs, when are we getting that famed altcoin season? Yeah, so I guess this really depends on when you think the rotation is going to come. Because usually what happens is people who've made their gains in the Bitcoin spot market will rotate out into altcoins, crypto whales, etc., and retail as well. But the question now is, okay, well, has the people, and by the way, just to preface also, we've got a video that covers all of this in terms of where we are in the market cycle, when altcoins could likely see the rally, etc., which is on the main channel as well, which is a few days old, which I definitely recommend you check out. But what I will say though is the question is, how quickly are we going to see rotation, and how likely is this rotation going to be as aggressive as it was in previous cycles? And I think the answer there is probably not as aggressive, and it probably may take a bit longer than usual. And that's because of the fact that what we've seen here is that we've had these ETF buyers who've now been buying into the ETFs, and these ETF buyers can't easily rotate into altcoins. Not practically, firstly, because you're buying an ETF, you're buying shares of it. You're not buying the spot product. You can't rotate out. And secondly, I don't think the guys, like I mentioned, the investors who are buying in Bitcoin now within the spot ETF market, retail institutions, are interested in diversifying into altcoins, right now at least. So they're not necessarily going to rotate their gains or as investments into altcoins. Then the question comes around the people, the crypto natives, the crypto native whales and the crypto native investors who've held Bitcoin spot and now have got all these big gains. Are they going to start rotating? And I guess they probably will start, because they kind of think to themselves, well, we got to start moving, we got to start making some more gains. Bitcoin's already broken through its all-time high. Question of whether we're going to fall again. And we have started to see, obviously, altcoins popping off again, and retail retail tourists are starting to come back. Right, like look at what we've seen over the past week or two. Coinbase going down. I mean, what sort of a market is it? If the good old Coinbase doesn't go down once or twice, just for good measure. But yeah, Coinbase going down. We've seen like massive amounts of volume in terms of website traffic. And then of course there's views on our channel and other social metrics. And of course, that's all empirical. But then of course, anecdotal evidence, you've got the question of like your friends reaching out to you like, oh, what's going on with Bitcoin? Can I get in on it? So those are all points that retail is potentially coming back. Question though, in terms of the 2021 cycle and the retail in this cycle is, how well positioned is retail in general? When I say retail in general, I'm talking about the whole swath of people out there to be able to want to speculate on cryptocurrency altcoins. And, there's a lot of talk about the cost of living crisis, inflation. In the previous cycle, you had obviously the stimmy checks that helped a lot. People were just aping into meme stocks, meme coins. So there was a lot of free capital flowing around for people to invest and diversify into altcoins, the general retail side. Whereas now it's like markets are a bit tight. I mean, people are a bit tighter, things are a bit tougher economically. So maybe there won't be that amount of retail flow like new retail flow into the markets this cycle, which is a theory I've seen played out. But I think that it's starting to come in, and I think that at the end of the day, people want to make money in a bull market, right? And this is just the nature of the beast. More gains attract more interest, attract more headlines, which attract more interest again, which attract more gains as more people buy in. Self-fulfilling prophecy, and that's what's going to potentially happen on the altcoin side. However, like I've said back to the beginning, whether we're going to see the people who've invested in Bitcoin ETFs rotating in is unlikely, which therefore means that the extent of the altcoin season in relation to Bitcoin is going to be less so this cycle, right? So the gains relative to Bitcoin in the altcoin space that you would have seen in previous cycles is likely to be less so this cycle. Doesn't mean you're not going to make a lot of gains in altcoins. Doesn't mean altcoins are not going to outperform Bitcoin at some stage when the altcoin season starts. But it means that the percentage returns that you can expect altcoins relative to Bitcoin is not going to be as high, which therefore means that I don't think Bitcoin dominance will fall as much as it has in the past. So that's a long-winded way of answering your question, to be honest. And this is next question. And this is from Think D. And he's asking, when should you move to Dubai for tax purposes? Tax purposes, yeah. I mean, first of all, I'll say one thing, it's just not as easy as that. You don't just move here for tax purposes, pick up and, I've made all my crypto gains, I'm sitting on some massive profit, I'm just going to hop on a plane, come to Dubai, Habibi, and go and buy a villa on the Palm. It doesn't work like that. Firstly, I mean, the tax man, wherever you're currently based, I assume, is no idiot. And people know that people try to do these kind of stunts, like trying to just move to a tax efficient place. And I don't think anyone should view Dubai or any other country that's got lower taxes as some sort of quick jurisdictional arbitrage. There's a lot of processes that have to be followed. and procedures, and you have to fully exit the tax net of the country you live in and make sure that you've done everything correctly before just moving to Dubai. And also, you've got to move your tax residency properly, because if you still have economic presence of some description within your home country, I don't know, you're renting, you've got a property, you've got bank accounts, you've still got money coming in, people paying you there, then, the taxman will look at that and say, wait, you still have some economic presence here. Or can you really be considered a Dubai tax resident? Also, and I'm speaking, obviously, this is all not tax advice, and, these are different countries have different rules. But I know for a lot of the team members who moved from the UK, there's very specific rules around tax presence in the UK. And once you've exited the UK tax and gone to a place like Dubai, there are very strong rules around how long you can spend within the UK within a year. Not just for how long you can spend, but much of that time can be spent working. And you need to keep track of your days, and you need to keep track of all of that. And you can't go and exit the UK, realize and crystallize your gains, take your crypto wealth, and then move back to the UK. You need to be out of the UK for a 5-year period. So, and don't think that the taxman doesn't know this and doesn't track this stuff, right? Like, I've heard of stories of people in the UK citizens who've gone back and accidentally spent a day over, or a day extra, or even sometimes a few hours extra, and they get a bill from HMRC. Keep track of this stuff at the border. So the point of the matter is, it's not just that easy. You need it's a process where you have to make sure you fully exited the tax net you've been in, and you need to go, and when you move into Dubai, you also need to go through a lot of different steps and processes and actually move your full physical tax presence here. Obviously, it's something that we have done, we have experience in, and I'm actually looking to do a video at some point. I'm working on it. It will be a complete overview and guide about moving to Dubai for crypto people as well as people in general, which hopefully will give you guys a bit more of a perspective on it and what's required. But another thing is, also says, I don't like the idea and the concept of people thinking, hey, Dubai, just taxes. I'm going to go and save on taxes. Dubai's a great place. I mean, there's so much more going on here. It's not just about the taxes. It's an amazing ecosystem. It's a great country to be able to live and work. It's safe. I love living in Dubai, and I didn't just come here because of the taxes. There were many other reasons. So I think you'd need to think more about why you come to Dubai, and not just because of that reason. Because if you're just moving for one reason like that, then you haven't done your due diligence about living in the place, because you have to live here for quite some time, and you're doing it for the wrong reasons. So yeah, that's just my answer to you there, man. The next question, and this is on meme coins. It's an interesting one. Rithik Prasad asks, with ETH and Sol in meme coin season, could AVAX be next? Yeah, man. Now, this is very interesting, because I think that this is the question of, like, what is the purpose and utility of meme coins within an ecosystem? And there is a lot more to it than just, a fun meme, right? I think that meme coins, and if an ecosystem can build an exciting and engaging meme coin that gets a lot of people interested in diving into it and builds and demand on the network, it can actually drive the growth of the network itself. And, it's funny, I was actually speaking to someone pretty well respected in the space recently, and they said that, VCs are actually now investing in meme coins because they see what their value they bring in terms of two ecosystems, and of course what gains they can bring. Now, obviously, yes, we've seen the gains we've seen on Ethereum and Solana-based blockchains, these meme coins. Pepe, Bonk, Whiff, Dogwoof had all that. And now the question is, what other blockchains and L1s are they going to pop off on? Because that's how rotation works through it. Obviously, you can disclose I hold AVAX in my personal portfolio. But what I will say is Avalanche has recently announced that they have a $100 million culture catalyst fund that is going to look to invest in meme coins, is looking to invest in meme coins that are building on the Avalanche blockchain. So how crazy is that? Avalanche itself is going to be investing in meme coins and encouraging them to come onto their blockchain. Now, what's cool about this is that they actually have given out a list of criteria they're going to use for their meme coin investments. So what does that mean? Well, you've got a pretty cool checklist of things to look for meme coins on the Avalanche ecosystem. So for one, I mean, obviously they have to be, it no longer has to be like, it has to be completely separated from the developers, right? Decentralized in that respect. There has to be at least 2,000 holders of the tokens with at least the top 100, which have no more than 60% of the supply. There has to be at least $200,000 in liquidity that's provided by at least 30 liquidity providers. There has to be about $1 million market cap, and there has to be about an average daily volume of about $100,000 over the past 2 weeks. So, those are the criteria you can use to check out if any of these potential meme coins that I want to build on the Avalanche ecosystem meet that criteria. Could the Avalanche Culture Catalyst Fund potentially be investing in them? So write those down, take a look, go and scan on, go and take a look on CoinMarketCap and look at these meme coins that are built in there, because if they meet that criteria, could be some alpha over there. So yeah, that's the Avalanche meme coin ecosystem. It's crazy to think that the project foundation is actually considering investing in meme coins, but that's where we've come. And like I say, people think meme coins are just a joke, but they actually drive liquidity, they drive demand, they drive use, they drive use on a network. And that obviously use, demand begets more use and demand from actually reputable projects that are building actual dApps and stuff that people are going to use beyond just a meme coin. So they can kickstart an ecosystem. So yeah, cool. Now move on to some of the altcoins, altcoin recommendations. And this is from Kedia Ankit. And he's asking, top 3 alts to buy right now. Yeah, I had to think about this one because I want to give you a good selection of altcoins across the market cap spectrum, as well as some potentially that haven't launched yet that I think it could be exciting to look out for. So this is, of course, not financial advice, right? But what I will say is that first on the big top, in terms of the big market, relatively large market cap altcoins that you could consider, one which I hold in my portfolio as well, which is NIA. Now, I've talked about this 2 weeks ago. NIA over the past 2-3 days has crushed it in terms of price action. But I think that it's still got some potential and strong growth to go, because obviously in terms of its growth, its demand, fundamental demand in terms of TVL and dApps building on it, transactional demand, as well as just how amazing this technology is. This whole concept of dynamic resharding, Nightshade, and developers themselves are super smart ex-Googlers. And this project itself, so it's basically got a lot of fundamental demand. And given the price action compared to some of the other L1s hasn't been as exponential, right? Which therefore means it could be a sleeping giant in terms of L1 competition to Ethereum, Solana, etc. Tokenomics is also pretty good. It's also it's also fully vested out right now, so you don't have to worry about any large unlocks, which you do on a lot of the other L1s have taken large VC funding. So that's the first one, NIA. Now, the second one is one that I don't hold in my portfolio, but I came across a few days ago whilst doing research in the Cosmos ecosystem. And also, it's quite akin to a big project I'm a fan of, obviously Injective. And this project that I'm talking about is Kujiri. Now, it's been around for quite some time. It's a DEX on Cosmos. It came from the Terra ecosystem, right? And after the Terra ecosystem, obviously, it looked to build on a new ecosystem, which is, of course, built on the Cosmos SDK. And it's basically it's a DeFi DEX, akin to an Injective. However, it's run completely by a DAO. And the DAO votes in terms of determining what kind of projects can deploy on it. So there's no opportunity potentially for rug pulls. And also, of course, what's cool about the tokenomics is that all fees are natively accrued to the holders within the DAO, right? So everyone's participating in that. And it's fully circulating, so there's no vests out. And it is a straightforward value accrual. That's one of the most important things. And if in terms of fundamental value to market cap or TVL, for instance, the TVL on here compared to Injective. So it's got 164 million TVL compared to 60 million on Injective. And its market cap is only 500 million compared to 3.5 billion on Injective. So look, I mean, obviously I'm still a fan of Injective. I hold Injective, I'm bullish on it. And there's a lot more going on there. And it's not a comparison necessarily, but I'm saying if you believe that, the gains that are Injective can be gained again in another Cosmos-based DEX or, DeFi ecosystem, then Kujiri could be it, Kuji. So that's one of those. Now, coming to the small cap, real alpha there, potential projects, which I'm really excited about. So one of them, which I've invested in a private sale round, is Lava Network. Now, Lava Network, like I said, I don't have a token out yet, but there is a way to get points for a potential airdrop, which I'll get to. But Lava Network is a decentralized RPC network. So if you guys don't know what an RPC network is, it's basically a decentralized node infrastructure where basically if you have a wallet and it needs to make calls to a blockchain, it uses these RPC endpoints. Think about your MetaMask, etc. Usually, in this case of Ethereum, for instance, the Ethereum ecosystem mostly, it's controlled by large entities. In this case, one of the biggest and most well-known is Infura, right? They run these RPC endpoints. And the thing with that is obviously you have centralization. When Infura goes down and you can't connect to the Ethereum blockchain, that creates questions around how centralized is this ecosystem generally. And Infura has also in the past blocked certain addresses or certain addresses because of potential countries that are not allowed to interact with the ecosystem. They've blocked access to certain dApps and that have been sanctioned, etc. So there's the question of centralization, and centralization from the perspective of uptime, and then also centralization from the perspective of permissionless. So anyways, Lava Network is a decentralized one which allows for allowing developers to send and receive data from a number of different blockchains. It's not just one blockchain, it's from a number of different ones. And so it's basically a decentralized network. And now in terms of how you get access to Lava, like they obviously are doing, you can earn points by connecting to their endpoints, and an incentive mechanism to farm these points is connecting through these airdrops. And I'll link to a guide on how to do it below if you want to potentially look. You just have to connect your wallet, your Keplers, etc., and utilize it. Just as simple as connecting to an RPC endpoint, like you do by changing your RPC endpoint for moving between Ethereum to other L2s, for instance. So that's one. Another one is Zion. Now, this is an interesting project. Of course, it hasn't reached TG or mainnet yet. I also invested in this project back in the day in a private sale round. Back then, it was a project that was looking to build an NFT marketplace. And the founder, actually, a chap called Bernd Banksy, because he made a spectacle of burning a Banksy piece of artwork, right? And this art was then, and this created a massive excitement for the project. And since that time, obviously, has rethought what it wants to develop. So basically, what Zion is doing now is a generalized account abstraction, right? So generalized account abstraction, basically, it creates the opportunity for bringing large amounts of Web 2 users to Web 3, because it takes away and abstracts out the difficulties of singular accounts within a cryptocurrency network, right? So if you think about the likes of, you got a private key, a public key, key management. If you lose your seed words, you can't get access to your funds again. Account abstraction will allow for using normalized Web 2 methods of securing accounts and accessing your accounts, email logins, or things like that, and brings it onto the blockchain, a completely new L1 just for account abstraction. So obviously Burnt itself, the project itself, is one of the first to fully utilize USDC and its primary transactional currency. And it's rolling towards mainnet launch. On their testnet, they demonstrated massive usage with more than 1 million meta accounts and smooth processing of over 12 million transactions. And like I say, the star power of this project in the recent launch to announce the mainnet, Bernd Banksy, the guy who burnt the Banksy artwork back in the day, which created a lot of media buzz. Set himself on fire and set the whole Zion thing. So they know how to, basically promote a project. They know how to create a lot of buzz. It's got big backers as well, it's an exciting. I don't think I've seen too many other projects in this space right now building an L1 completely for account abstraction with the use case of account abstraction. And I think that account abstraction, or the simplifying the onboarding of the users with Web 2 logins and taking away the complexities of key management, etc., that we usually have with Web 3, and basically improving the UX for retail to come in the cycle is one of the best ways to increase usage of a network and bring on mass adoption. So those are my picks of altcoins. Some of them you can buy right now, some of them you can farm it, and one of them is to watch for a mainnet coming soon. So hopefully keep those guys on your watch list. Okay, the next question is from Jazz Scott. And he's asking, what are your personal concerns about the crypto industry? Yeah, this is a good one, because I do have a few concerns, and I'm sure most people do. And it's not related to price. For one, it's like I'm concerned about the risks of centralized control and forgetting about the reason why we actually get into cryptocurrency. Obviously, I've done it. I'm guilty of this. We've all been, praising these ETFs, these big buyers. Oh, BlackRock, please buy my bags. Pump them to Valhalla. We come in. TradFi's coming. Take us to the moon. And what's really happening is obviously just a TradFi takeover of crypto, slowly but surely, right? And these ETFs are custody in the Bitcoin. The whole concept of not your keys, not your crypto, holding your own keys, which everyone is like, this is fundamental to the idea of cryptocurrency, permissionless access to your keys whenever, is now being thrown out the window as these ETFs just accumulate billions of dollars of Bitcoin, all held in a Coinbase custody. So I kind of feel I fear that. I worry. It's like, okay, are we just throwing the baby out with the bathwater, thinking, it doesn't matter, it's cool, price is going up, what does it matter? I'm getting richer. Who cares if they can't access their Bitcoin or whatnot? But the problem is like that's not what their cryptocurrency was originally envisioned for. So I think that, look, loads of concern. I think that at the end of the day, what's important is to make sure that people appreciate and understand the value and importance of self-custody. And as long as we continue to bang on that drum, and not just us here on the media side, but also you with your friends, your newbies, telling them, look, okay, you can buy it through an ETF. It's cool, it's easy, but understand that you don't actually hold the Bitcoin. Why don't you just go and buy some spot as well? Why don't you just go and create a Coinbase account? Let me show you. It's not too hard to do. Let's help to try and keep the ideals of crypto alive. So that's the one concern. And then my other concern is that, and this comes back to also what people do in bull markets and how crazy things get, is that we forget the lessons learned from the previous cycle. We go and get our hubris, and we get too much hubris goes flying around, and we start aping into random cryptocurrencies. People start leaving all their funds in an exchange. They go and people get easily fall for rug pulls, and they don't take profits because they just think it's going to keep on going up. And the thing is, in that environment, emotion takes over, and you forget the lessons learned. We think more intently focused on the markets, and we focused on our gains, and we don't. And that frame of mind, you just forget about the past. It's like, what does it matter? This time is different. There's ETFs are coming in. Bitcoin's going to 100, 200, 300K. What does it matter? It's completely different. So, although as much as I think market conditions have changed now with these ETFs, I think we still need to keep fresh in our mind all the experience in the past cycle, although especially the 2021 cycle, when so much, and subsequent to 2021 to 2022, the collapse of Luna, the FTX, is the idea of not leaving your funds in an exchange, of not over leveraging in terms of like these large hedge funds, etc., who went and took out massive under collateralized loans and blew up the ecosystem. If we can learn from that at least and still enjoy our gains, then I think it's going to be a more fortuitous cycle. But those are my two concerns. And now, got the final question is from Leighton053, and he asks, what are your guys' personal plans for the next 10 years? Do you want a family? Wow, man. What a serious question. Can't we ask a more simple question like explaining elliptic key cryptography or quantum resistant algorithms or something like that? Planning out the next 10 years, man. Obviously, I do want a family, obviously. So that's one thing. But in terms of the next 10 years, trying to plan out for the next 10 years, man, I'm just focused on right now trying to make the most of this bull cycle in terms of obviously personally, in terms of wealth growth of wealth, but also from the perspective of growing the Coin Bureau to become one of the most well-recognized names crypto education. So I'm trying to focus on this cycle, the next year or two, and the 10-year plan will come later. But I also think, guys, more generally, I think that now, this crypto cycle is the opportunity of a lifetime. And this reminds me actually of a quote I like to come back to, and that's, the opportunity of a lifetime needs to be seized in the lifetime of the opportunity. So this bull market is our opportunity. We need to seize this bull by both of its horns and make the most of it together. So what a great way to end the Q&A. Thanks again, guys, for sending over all of your questions. If you want to submit them, you know exactly what to do. Down below, the Instagram will be linked to, so go and submit your questions there. We ask you guys throughout the week to go and submit your questions. And then at the end of the week, we get together. Sometimes it's me and Jess, sometimes me and Guy, sometimes it's just me, etc. We'd like to answer as many of them as possible. And even if we don't answer the one you've submitted in the previous week, we try to come back to it sometimes. So I hope these answered your questions. Thanks again for submitting. Have a great week ahead, guys, and stay crypto. Cheers. Nick out.